Good morning. Thank you for joining us today. My name is Hannah Booth and I'm the Communications Manager here at Moorepay. It's my pleasure to introduce the topic to you for this session, which is payroll, what's new for tax year 2019-20. Before I introduce our host for today, I have a couple of housekeeping points to run through. We have nearly 500 registered attendees for this session, so to keep things manageable, the mics are muted. But that doesn't mean you can't ask questions throughout the webinar. You'll see there's a chat box and questions box within the viewing panel of GoToWebinar. You can use the chat box to let us know if you're facing any difficulties viewing the webinar. And in preparation for the Q&A session, please post your questions in the question box throughout the webinar, and John will answer as many of them as possible at the end of his presentation. We're keen for you to get as much value out of this webinar as possible, so please don't hesitate to post your questions. In terms of the structure of the webinar, I'll begin by providing an overview of Moorepay, then I'll introduce our host for today, John Spooner, and after the main body of the session, we'll come to the Q&A period. So firstly, I'd like to introduce Moorepay to you, as I'm conscious that not everyone in the webinar is a customer of ours. We're a payroll and HR solutions business. We were established over 50 years ago and have 10,000 customers across the UK. On a monthly basis, we produce approximately 500,000 pay slips and we handle around 12,500 payroll and HR queries. Essentially, we're the market leader in HR and payroll services to small businesses. If you want to find out more about us, go to moorepay.co.uk, where there's lots of information on our services and solutions. Moving on, I'm now going to tell you a little bit about today's host, John Spooner, who's a Payroll Legislation Consultant at Moorepay. John has over 48 years of experience in payroll and he's worked in both the public and private sector. I'll now hand over to John, who will take you through today's topic, what's new for tax year 2019-20 in payroll.
Thank you, Anna, for the introduction, and welcome everyone to this session. As Anna has said, we're looking at the changes for 2019-20, a little bit about what we're doing in the product as far as those new items are concerned, and also what we know so far for the following tax year 2020-21. Okay, Anna, thank you. Right, so before we set off, can you just click on the first one item, please? Right, here's just a couple of reminders. This is not new for this year. It's what there has been for a couple of years now. The first reminder is about gender pay gap reporting. So if you are a company which is mandatory, obliged to report your gender pay gap, just a reminder that this is due if you're a private sector employer by the 4th of April and a public sector employer by the 30th of March. That's report them on your public website as well as on the government website. And that, of course, is in relation to the snapshot which took place on the 31st of March for public and the 5th of April for private in 2018. And again, in 2019, it'll be the 31st of March and the 5th of April again as the snapshot dates. Also, if you operate an employer-supported childcare scheme, that includes childcare vouchers, then of course you've got your basic earnings assessment to do on the 6th of April, as you have to do each year to determine the category that the employees go into for tax relief. And lastly, the last reminder is if you are looking to payroll your benefits in kind, rather than having to do them on P11D, then for the 2019-20 year, you've got, well, the 5th of April to register with HMRC for that. And obviously, if you're going to do that, then obviously you need to let your payroll contact know that for 2019-20, you'll be then payrolling your benefits in kind rather than on a P11D. Right, next item, please, Hannah. Now, this came into effect, CEO pay ratio, in January. Now, this covers employers with more than 250 employees, where they will have to disclose and explain every year to their top top boss's pay and the gap between that and their average worker. Now, I'll explain this later. We won't be doing anything at all in our product for this, but all Moorepay clients do get a standard basic gender pay gap report produced each and every month with their payroll. So you could use that. We won't be doing anything special at all to do with CEO pay, because your CEO's pay, we don't know who they are necessarily, and also they could even be on a separate payroll. But of course, the gender pay gap report is only for that payroll. So it's mandated to disclose annually the ratio of their CEO's pay to the median, lower quartile and upper quartile. That's all to do with your gender pay gap reports. And companies will start reporting this in 2020. So it's applicable from now, but the first report is due in 2020 and is in accordance with your company's fiscal year. The new law also requires all large companies to report on how their directors take employee and other stakeholders' interests into account, and require large private companies to report on their corporate government arrangements. Alongside the pay ratio reporting, there will be a new statutory duty on companies to set out the impact of share price growth on executive pay outcomes. Of course, there's a lot of this been in the media, hasn't there, about executive pays. So, as I say, there will be links at the end of this presentation regarding CEO pay ratio reporting. And as I say, it's only for employers with more than 250 employees. Thank you, Anna. This next item, disguised remuneration, you may have heard of it, you may not have heard of it, you may know about it, but disguised remuneration is a kind of tax avoidance scheme which claims to avoid the need to pay income tax and national insurance contributions. So in other words, it's like a loan which is made by a third party with the client, which is unlikely ever to be repaid back, which of course is aimed to avoid paying income tax and national insurance. Now, HMRC have obviously cottoned on to this, and if you're in a disguised remuneration scheme, your company operates one, your employees are paid in that manner, then you should settle your tax affairs as soon as possible. If you don't, there is a new loan charge which was announced in the budget in 2016 that will apply to all disguised remuneration loans outstanding as at the 5th of April 2019. Now, this is quite an involved topic, and there has been publication of this in the HMRC's Employers Bulletin from time to time, and also in this last one, which was February's. There is a link to that at the end of this presentation. But basically, if you do have employees like that, and your employees have got such outstanding loans, then you must talk to HMRC about it. And obviously, there is tax and national insurance implications. And if you report before the 5th of April, you will not get the interest. But you obviously need to record these, and as such, software developers have been instructed to make allowance for these codes in our submissions to HMRC. So obviously we can only do that if we're informed of that by yourselves and who the individuals are. So it is a case of deducting the tax and national insurance and any other statutory deductions which are applicable at that time when this goes through the payroll. And it's also done as part of any year-end updates that are required to be done as well. So obviously look at the link, decide whether you have got people like that, talk to HMRC, and also let us know who the individuals are and the amounts. Thank you, Anna. As happens every year, of course, the national minimum and the national living wage rates are reviewed by the Low Pay Commission, and they've made their recommendations for this year. And as the two now are consolidated into one update, which is on the 1st of April, excuse me, these have increased. There is a link again at the end of the presentation of what the new rates are. basically I'll just explain that the national living wage rate for those aged 25 and over, which is the NLW, goes up to £8.21. The national minimum wage rate for those aged 21 to 24 goes to £7.70 an hour, all applicable from the 1st of April. Thank you, Anna. Benefit rates. These are parental ones: statutory maternity, statutory adoption, statutory paternity, and statutory shared parental leave and pay. Those have increased from the 1st of April. And again, there's a link at the end of the document as to what they are. So that's an increase in the payment and also in the earnings threshold of that as well. 6th of April, because that's always different for statutory sick pay, that applies from there. And again, there's a slight increase in the payment rate and a slight increase in the earnings threshold there. Again, links at the end of the document. Next one, Anna, please. This is the one that, as an individual, we'll all be interested in. Excuse me. There are new tax and NICS rates and thresholds which apply from the 6th of April in the UK, Scotland, and now we have Welsh tax. If we just concentrate on the moment of England and Wales and Northern Ireland, the universal allowance will increase to £12,500 per annum. That's universal allowance being the new phrase for personal allowance. So that's gone up from £11,850 to £12,500 per annum from the 6th of April, which was a pledge by the Conservative government to do that, which they've done now earlier than anticipated. And they've also, again, with an election pledge, increased the higher rate threshold to £50,000 per annum before the higher rate kicks in, meaning that the basic rate threshold, the 20% basic threshold, is now £37,500. I do apologise. The new higher rate threshold will not, however, apply in Scotland because they have their own tax bandings. It will apply in Wales rather as well for 2019-20, and basically Welsh tax will be the same as UK tax for next year. Welsh taxpayers, however, will all be signified by a C prefix to their code, which is similar to the Scottish ones who have an S prefix to their code. HMRC determine that, you don't determine that, we don't determine that. It's all determined by HMRC and where the particular employee resides. Now for Scotland, the tax changes, the tax bands, because they have just changed, they've played about this year just with the tax bands, not with the percentages, because they brought in additional percentages last year in Scotland. So the starter rate of tax, which is 19%, is for earnings over £12,500 to £14,549 per annum. The basic rate, the 20%, is over £14,549 to £24,944. The intermediate rate, that's the 21% band, is over £24,944 to £43,430. And the higher rate, 41,000, is over 43,430 to 150,000. And then the top rate, the 46% band, is for earnings above £150,000. Next one, please, Anna. Thank you. This year also sees the final increase in the auto-enrolment pension increases. So there was a phased increase in here, which was announced in 2012 when auto-enrolment first came in, that there would be increases. Of course, auto-enrolment pensions started off at a total contribution, that's both employee and employer, at 2%, but which was then changed last year to a minimum contribution overall employee-employer of 5%. And now this year, from the 6th of April, is the final increase, which takes the contribution from 5% overall to 8% overall. Now, there is a minimum contribution here, which is for the employer There isn't a minimum employee, there is a minimum employer contribution to be made here, because you may have seen in various sources a statement made that there is a minimum employee contribution. That is incorrect. And in fact, we will have communicated out to all our client base as to what we're doing in the system, and I'll explain that again on the next slide, but we are doing something automatically in there. So the employer can pay him more than the minimum. As long as he pays in at least the minimum, that's the law, but it can pay him more. So if the employer pays him more, it means the employee doesn't have to pay in as much. In other words, if the employer pays him 4%, it means the employee only pays him 4%, not 5%. But there are differences in how the scheme is set up according to qualifying earnings. So there are variations in that. And again, there's a link to what the increases are on the various qualifying schemes in the hyperlinks at the end of this presentation. The earnings threshold for auto-enrolment earnings has increased in line with national insurance contributions, but the earnings trigger still remains at 10,000 as it has done since its first inception. Next one, please, Hannah. Postgraduate loans. Now, this is new for this year, and it's a new type of educational loan. As the name describes, it's a post-grad loan, not a student loan. Now, post-grad loans trigger after £21,000 of earnings per annum, with a deduction percentage of 6%. And if you have an employee that has already got a student loan of one type or another, type 1 or type 2, and if you are directed to do so, then you could also deduct postgraduate loans as well. So they can exist together. But you can't have a student loan type 1 and type 2 together. It's either one or the other. But you can have a postgrad loan mixed in there. So, to get notified of this, the starter checklist, which HMRC has now revised and published, also has got on there questions regarding postgrad loans. So, you could be told that you need to operate a postgrad loan from a starter checklist. You could also get it direct from HMRC as a PGL1 notification. And it could also come from the P45. Now, the P45 itself has not been amended. So if an employee or new employee has told you they've got on their starter checklist one of these, then the P45 they supply you will just have a simple indicator in that box to say they have got a student loan. But it could also mean they've got a postgrad loan. Now, in their wisdom, HMRC decided not to change the P45, but they have elaborated very much so on the starter checklist. So regardless of whether you get a P45, it's a must really you get your employees to fill in a starter checklist as well, because this will indicate better for you as to whether it's a student loan or a P45. If they don't supply a starter checklist, but you've got a P45 that says student loan, then the only advice I can give you is to operate student loan type 1. HMRC will then advise if it's anything different, but really you should be getting all in new starters to complete a starter checklist. As I said, postgrad loans will run alongside any existing student loans, but will operate independently of each other. Now, where earnings levels are sufficient, then both a student loan and a PGL can be deducted from the employee's pay. But PGLs will have priority over student loans, and the reason behind that is I understand they're a higher interest rate. So that's why they can take priority over a normal student loan. Thank you, please, Anna. Next one. The thresholds for student loans have also gone up. This is a student loan type 1 and type 2. The thresholds have increased from the 6th of April. and I haven't got them here to hand, but to tell you, but that was widely publicised some months ago, actually, even before the budget. So I think I'll have to stand to be corrected here, but I think student loan type 2 is 25,725 now is the earnings limit, and on student loan plan type 1 I think it's 18,700, but don't quote me on that because I haven't got it in front of me, but certainly they have been updated anyway, so that's a new increase in the earnings thresholds. Next one please, Anna. We've already discussed the new starter checklist, so not to worry about that. The one thing I will add about the starter checklist, though, however, is that as well as including postgrad loans on there, they have slightly amended the question to do with student loans. So the previous starter checklist said student loan plan type 1 or plan type 2 as a checkbox, but they've now added an additional checkbox which says both. Now, I suppose in practice that could happen, that a student has got a type 1 and a type 2 type loan, but nonetheless we can only ever operate one type at once. So if they've ticked I've got both, we can only really deduct one, and it would always be student loan plan type 1, and in which case the revenue would look at that, and if we tick the wrong one they would tell us to stop that one and start a student loan plan type 2. And if it wasn't that and it was a PGL, obviously that would be on the starter checklist anyway. But just be mindful of that when you see the starter checklist, they have included an additional checkbox. So I think it's even more important now to do with the student loans or PGLs that is completed. Right, now changes to company cars and CO2 fuel emissions and fuel types. Now, there's been a new fuel type introduced for RDE2 compliant diesel cars. Now, this new fuel type is F. And if your company supplies RDF2 compliant diesel cars to its employees, then this will not attract the diesel supplement, which is now at 4%. That increased last year. So these new type of vehicles, and I don't think there's that many of them out there currently, but there is a new type one out there. I think it's a Jaguar that has got this new RDE2 compliant diesel category. And I say that does not attract the diesel fuel supplement. As far as the fuel types are concerned, there is now going to be 3 fuel types. Fuel type A is for all petrol cars and all hybrids. Type F, as we've said, is for RDE2 compliant diesel cars, which are the clean diesels. And then fuel type D is for all other diesels. And obviously the CO2 emissions chart has changes in there for the percentages and the levels. The maximum still is 37%, by the way. Next one, please. Scottish earnings arrestments. Now, the Scottish courts every 3 years do review the tables for the deduction of Scottish earnings arrestments, and 2019 is now due for the change of those, on which they have revised and issued to us, so that there will be changes to the deduction rates there. And again, that table is provided as a link at the end of the presentation. Next one, please, Anna. Itemised pay statements. Now, the Employment Rights Act 1996 has had a supplement made to this, which means there's two major changes here. Previously, only employees were entitled to a pay slip. Workers, the category of workers, weren't entitled by law to a pay slip, an itemised pay slip. That has now changed, so employees and workers are entitled to an itemised pay slip. Further to that, what this also states is that where a person's pay fluctuates in accordance to the hours they work, then those hours must be shown on the pay slip, either separately or as an aggregated figure. So those are the two main changes there. And you will need to speak if you're supplying to us as your payroll provider just a cash figure every week or every month to pay your employees, then that process will need to change, and you will need to discuss with us, with your payroll contact, about changing that, because by law, hours now must be shown on the pay slip. Next, please, Anna. We haven't got anything to do yet with the amount of a week's pay. Of course, the amount of a week's pay was used to be announced in February, but this is now changed to April, and this is to do with calculating the compensation for unfair dismissal and redundancy, etc. But we don't know what that is yet, so that's still pending. That's the only thing we don't yet know from the 6th of April, what that will be. I expect it to be published very shortly, so keep your eyes on that, and we will publicise that once we get to know it as well. And lastly, this is not legislation as in the normal run-of-the-mill legislation. This is a progressive change that HMRC are now cottoning onto, whereas they are finding out that people being paid in anything other than coin of the realm, in other words, pounds and pence, they are missing out here on potentially on additional tax and national insurance. So crypto assets are relatively new, as I say, that type of asset to become more prevalent in recent years. And new technology has led to crypto assets being created in a wide range of forms and for various different reasons. There are three types of crypto assets: exchange tokens, utility tokens, security tokens. And one of those, I believe you can class as that, is the Bitcoin. I'm sure on media you'll have seen mention of Bitcoins from time to time. They're a type of crypto asset. In other words, another form of benefit which can be turned into money at the end of the day. Now, it's quite a complex area, is crypto assets, and indeed HMRC have also started to add it to other elements of their guidance. For example, paying employees in shares or commodities or other non-cash pay. They've added crypto assets to that as well. Now, as I say, it's quite involved, and where crypto assets are deemed as income, as money's worth, as HMRC quoted, these will be subject to tax and national insurance contributions on the value of that asset. Now, it depends what that asset is, how it is disposed of, as to whether it is something that will need to come under PAYE. And certainly HMRC have put it under paying employees in shares, commodities or other non-cash pays, and the link to the definition of crypto assets is included in this document, as well as to the paying employees in shares, commodities or other non-cash pays. As I say, it is very complex, and what you need to report and pay, and to recovering the tax and national insurance on those types of payments, pseudo payments. Thank you. Please, next page, Hannah. So, our products have been updated in line with the legislative changes that I've described. What we haven't updated and done anything at all about is with relation to CEO pay. As I've previously mentioned, we provide to all our clients the gender pay gap reporting, but as far as your CEO's pay, that will be down to yourselves to add that in if you're mandated to do so, if you're a company of 250 or more employees. So we won't be doing anything of that. We won't be doing anything particularly with crypto assets, but we are doing things with disguised remuneration, with the AE pension increases, and the AE pension increases, in actual fact, we have sent out to our client base last week. And if you haven't got it, by all means, please get in contact with the marketing team, because we did send a 2-page document out saying what the increases were, not the pay increases, what the contribution increases were, how we're planning to deal with it, and to the effect that if you have the managed service with us, then we will deal with that. If you don't, then that's the responsibility of the employer. But there are also requirements for the employers to tell us certain aspects of it as well. So it's quite an involved document. As I say, it's 2 pages long, and it was sent out last week. So by all means, if you haven't got it, contact your payroll contact or contact the marketing team, because that went out last week. Disguised remuneration: if you have any employee who has been treated in this manner, the employee and the employer should report this to HMRC, and clients also need to inform Moorepay of the amount so that we can record this via payroll and account for any tax and NICs. And the last thing there is our product release notes will soon be made available to all our client base. Next page, please, Hannah. Here are the links that I spoke of. There is 2 for crypto assets, explaining what they are, and in also paying employees in shares, commodities, and other non-cash pay. It's a very involved read. I do suggest that you do read that if you do pay your employees in those kinds of manner, particularly with Bitcoin. We've got the new starter checklist and the latest HMRC employer bulletin there, which if you don't currently get it, by all means register for it with HMRC. It is full of useful information and comes out every 2 months. Next screen, please, Hannah. Right. For the following year, 2020-21, what do we know? Well, the first item on there has been on the legislation list for the past 2 years. This is termination payments in excess of £30,000, where HMRC are saying these will be subject to Class 1A national insurance contributions. Now, it's been postponed again until 2020-21, and they still are looking at doing this via payroll. And of course, as we all know, Class 1As aren't dealt with via payroll. They're dealt with on a Class 1, on a P11DB, and done that way. But this calculation, they're wanting to be done by payroll and reported each and every pay period. But I don't think actually they've worked out how to do it yet, and I think it's been the reason behind the delay. But they are still wanting it done in real time. So we'll wait and see until 2020 what they do there. Employment allowance, which is applicable to all payrolls, apart from single director payrolls. So the employment allowance will be limited to the smaller employer from next year. And that's a smaller employer with a NICs bill in the previous tax year of less than £100,000. That's employee-employer NICs. So they are severely restricting that now to just a smaller employer only. Off-payroll working in the private sector. Currently, we've got off-payroll working in the public sector. This is where you have people who you employ who say that they are their own company, and when it actually turns out really they're not really their own company. You as the employer are directing how they work, what they do, how they would do it. And as such, a class should be classed as employees, not contractors. There is on the HMRC website a tool for using to determine that. But as I say, that is currently for public sector employers only. And what is now being planned is that this will come in for the private sector from next April. So that means everybody is going to have to be covered by this working. What's also new from next year, and we're only guessing it's from the 6th of April, we haven't been told precisely, is the Parental Bereavement Leave and Pay Act, which was passed late last year, and which comes into force during 2020. And it will give a day one right to people who unfortunately have a child who dies under the age of 18, where they can ask for paid parental bereavement leave. And lastly, the only other thing I've got to tell you about for 2020 is that the state pension age in October will then be 66 for male and females. As we know, over the last few years, it's been gradually increasing from 65 to 66. Sorry, from 60 to 65 for females, but then from the 6th of December last year, it will increase to 66 in October 2020. So if you were eligible to become 65 just after the 6th of December, then you would have to wait several months before you're then eligible for the state pension, and progressively so until it gets to the October 2020, when it will then be 66. And of course, when it gets to 66, then of course, in your working, you will not pay any national insurance contributions beyond that period, or any other period between now and then, when you reach your eligible state pension age. And our system will automatically cater for that in that respect as well. So just remember that the employee will no longer pay any further national insurance contributions. I've done now, so I'm going to hand it over back to Anna.
Thank you very much, John. Now we will move on to the questions. I'm sure you all have plenty. Please continue to drop them into the question box and we will pick them up and work through them. Please feel free to ask any questions relating to anything within this topic or anything that's specific to your business. So we will start off with the questions now. First question is from John, and he's asked, are we obliged to write to all staff regarding the changes in auto-enrolment, or only those affected by the increase?
You would need to obviously inform your workforce that the auto-enrolment pension increases are being applied, and I would do it as a general company statement rather than individually. The pensions regulator does have sample letters on their website that you can use to write to your employees about the increase. And if it is only to do with the ones that's in the auto-enrolment pension scheme, then obviously only send them to those in the auto-enrolment pension scheme. Because if you have got other pension schemes that people are involved with, it and nothing else to do with auto-enrolment, and who are equal to or better than auto-enrolment pension schemes, then there'll be no need to do that just for the ones that are part of the auto-enrolment pension scheme.
That's great, thank you, John. I'm moving on to the second question. This is from Benali. When is the new starter form coming out?
It's out now. It was published a week or two ago. So it's there on the government's website. And if I haven't put a link to it, I can provide you with a link. Oh, yes, I have. There's a link at the end of the form. The new starter checklist is there.
Fantastic, great. Thank you, John. We also have a question from Paul. Paul has asked, if we pay 1/12 of annual salary each month, do we need to show hours on pay slips?
No. There is the Business, Energy, Industrial Skills Department of the government have issued a guidance on that, and certainly it does mention the fact that where the pay varies according to the hours worked, then that needs to be shown. But if it is to do with the fact if it's a salaried person, and for example they have gone into a period of sickness and that sickness has expired, then I believe that the guidance says that you don't need to show the hours then on that pay slip, because it's just a variation in accordance with the contract of employment. but it is particularly down to just the hours worked in that respect, where this varies and fluctuates each and every pay period. But there is again a link in here to itemized pay statements and what it's all involved, and that, I believe, should take you to the guidance notes issued by BIS. If you don't happen to see the guidance notes by BIS, certainly if you just want to email me, I can send you that guidance link out.
Great, thank you, John. We've also got a question from Lisa, and she's asked, will we get a notification if we're a company which is required to report on CEO pay ratios?
Sorry, sir, give that one to me again, please.
And so Lisa's just really asking, will she receive a notification if her company is required to report on CEO pay ratios?
I don't actually know to that, I have to say. I can follow that one up and come back to Lisa, certainly. I haven't seen
problem, Lisa, we'll find out.
Yep. If you want to let me know the details, I'll get back to Lisa on that one, please, Anna.
Okay, no problem. We've also got a question from Emily. Emily has asked, a company gives a staff loan which they pay back over the year. Is this disguised remuneration?
They're paying that loan back, then that should be fine. I mean, sometimes these loans are normally taken back on the following pay period when the actual payment goes through, that is taxed and nixed. And then the net loan is then taken off. But I'm assuming this loan is done. I don't know what it's for particularly, but as long as it's recovered, and it is being recovered, then that is not disguised remuneration as far as I'm concerned, because disguised remuneration says this loan is given and never paid back.
We've also got another question from Katie, which is also about disguised remuneration, and she's asked, are cycle to work and childcare vouchers considered to be disguised remuneration? No, didn't think so. That's fine, just to clarify on those two. And I will just see, we've got a few more questions that have come through. Got a question from Lucille, who has asked, will the new payslip regulations cover allowances paid for set hours of work, for example, £100 for 6 hours and £50 for 3 hours?
If that's something that varies each and every month, because it's where the pay fluctuates, remember here, then that would need to be recorded, yes.
That's great,
so
thank you.
So if you're providing a fixed amount according to hours worked to us, then you need to discuss with us a way around to get to show the hours for those period of hours. Because obviously this is all to do with clarity and giving to the employee as much clarity as possible on their pay slips as to the hours they've worked, and to some degree also the rate that they're paid at, because remember, you could have people on national minimum wage rate here. So if you're looking at a certain fixed sum for working so many hours, does that cover national minimum wage rates? I mean, if that person wants to clarify with me further, Hannah, yes, you certainly can contact me on that one.
Great, thank you, John. I think we've got time for just one or two more questions. So let's just have a quick look. We've got a question from Anna, who's asked about the CEO pay ratio reporting again, and she's asked that it's applicable for people with more than 250 employees, and she's just wanting to find out whether or not that's 250 employees in one location, or whether it could be spread over several locations if you've got a number of different sites throughout the UK, for example. Now, again, I think that's one that we might need to come back to.
I've not seen any mention of that in the HMRC's guidance on it, particularly. I would imagine that it covers, if you're an employer and you've got sites here, there, and everywhere throughout the country, that include all your employees if they're covered under that employer's umbrella. But again, refer to the link that we've provided to you, but I've read nothing that would actually stipulates that it is, you know, 250 per site or per organisation. I think it's per organisation.
That's great, thank you, John. Right, so what we'll do is we'll bring these questions to an end now, and if anybody does have any further questions, then they can email John directly, or they can also email myself. I'll make sure that both of our contact details are on the slides when we send them out and share them with you. Now, in terms of additional content that's also available to you on the Moorepay website, there's a payroll legislation guide that's produced on a bi-monthly basis. You can download this from the Moorepay website. It's in the resources section of our website, and then there's also one on employment law and HR legislation as well. And in terms of payroll specifically, we have got a live demo taking place next week. It's on Thursday the 28th of February at 10 AM. If you're wanting to find out more about our payroll software, how it works, key features, that kind of thing, then please do register for that. Again, it's in the resources section of the website, and I'll make sure that there's a link on the slides for you. In terms of connecting with us, if you follow us on any of our social sites, we publish all of our new blogs and guides on there, so you'll see them flash up on your news feed. Thank you very much for everyone's time today. I hope you found the webinar helpful. I will be sending out the slides and recording as soon as they become available, so watch out for those and they'll pop into your inbox. I'll now close the webinar. Thank you for everyone's time, and again, if you do have any additional questions, then please don't hesitate to contact us. Thank you very much.
Thank you, everyone.